on our agenda for this day, and if you watch it on YouTube, you can see it. The agenda for this webinar is the following topics, and it would be a pleasure, and I'm feeling honored if you would stay till the end of this webinar, because we have to talk a lot of interesting things. It is would be very helpful for your own trading. And I want to say greetings around the world, wherever you are, because I can see a lot of interesting names here, and I'm really feeling pleasured and honored that you'll be a part of this webinar, and sending greetings wherever you are. So on today's agenda is, why is diversification important, basically? Diversification's role in trading strategies and in, of course, risk management, and the danger of not having a diversified portfolio or strategy. And the chat, guys, is open. If you have any questions, any wishes, or whatever is in your mind, type it in the question box or in the chat box. I can see it. My colleague opens that for me so I can see it. Please feel free, because let me tell you one secret about trading. The biggest secret in trading is there is no secrets. The biggest secret is that you have to change your mindset, and you have. This is our our topics for today. That diversification is just an evergreen, just basic informations, like all the other topics from my colleagues Paul and Jens. And next one is on Friday, so I will give you the information about Friday at the end of this webinar and at the end of this video, of course. So let's go on, guys, and let me introduce you myself. This is not important. I'm engaged 20 years right now, but that's the guys. They are really important, because that's your partners about Admiral Markets. Wonderful, amazing guys, girls and men and boys there. They're working really hard to give you much support to become better in trading, to have wonderful over 8,000 financial instruments and Forex and CFD broker. We have offices in 20+ countries, so we are around the world, and we are licensed about a lot of FCA, EFSA, SISEC and ASIC, and competitive spreads. Oh my God, what a word. Typically 0.6 pips for Euro USD and 0.8 pips for the DAX 30. And of course, we're working with MetaTrader 4 and 5. You can work wherever you are. So let's talk about this, and I hope you have your coffee as well, like me, because you know it's coffee time. I guess it's the best time in the afternoon before markets open in around 30 minutes, and everybody is waiting for that. And this time we can use to talk about diversification. Why is it important? The first sentence you can read here is, it is a fact that beginners have no clue about diversification in trading. Guys, this is not an insult. I don't want to insult you with that. So unfortunately, it's a fact. Because if you come to trading, most of the beginners are focused on one chart, or the DAX, or the Euro, or gold, or the Dow Jones, or something else. They don't, okay, you know the word diversification, but how you can use it in trading, it's completely different. And most of the beginners absolutely have no clue if there are existing diversification in trading and how they can use it. And this is one of the most important things in trading, by side of risk management and all the other topics, because as I said, most of the beginners are really focused on one chart or asset. And I know a lot of guys, they come to me and said, oh, I'm an expert in DAX. Maybe you know such expressions from your colleagues or friends, and maybe they said, oh, I'm an expert in gold. I know how gold works in market, or in silver. Or I had a client, and after 3 months, he said to me, oh, now I'm an expert in oil. I'm the oil trader, and I know about everything about oil, and I know about everything, the chart, and I can say you what's happening in the chart. Okay, couple of weeks later, he was no longer an oil expert, because after that, he made a lot of other experience about oil. And once I asked him, do you know that guy? He is sitting in Asia, and that guy, I know that guy, he works in futures, and he has such a large and huge amount and account. He is able to influence the market, and that guy in Asia, on the Philippines, has so much money. He has an impact to the market. And I asked him, do you know that guy? And he said, no. Okay, then I said, then you cannot change. Then you cannot change the market, and then you cannot know how the market will work in oil. So, and that's the point. We come very often to trading, especially newbies or the beginners, and they are focused on one chart. And diversification, especially or basically, gives you a bigger overview of the markets. Yes, I believe we need at least 20 millions to move Euro USD on base point. Yes, I guess this is not enough. Not Vincenzo, it's not enough. I guess we should triple it or more than triple it to have impact on Euro USD. So diversification, guys, gives you a big overview of the market. What does it mean? Diversification means that you watch, for example, Vincenzo watching Euros USD. I have a look at the US dollar ninja, US dollar Japanese yen, or I have especially a view at the treasuries or at the DAX and the Dow and NASDAQ and a couple of other very important majors in the currencies. That gives you a really big overview, because there's just only one advice. There's risk on, risk off mode. Did you ever hear that point? Risk on, risk off mode. That means money is switching to the markets and out of Ninja or Swiss franc or gold. Risk on mode means more money to the shares, to the stock exchanges. And if people are more risky and they are more willing to get the money to the shares, and we have risk off and safe havens like Ninja, Japanese yen, Swiss franc, gold, such thing. This is risk on and risk off mode. And for that means a little bit diversification, guys. And still, guys, for you, if you come a little bit later, the poll is still open. We have two questions for you. Do you have a live account with Admiral Markets, and which one describes you the best? Please, it will be a great pleasure if you fulfill this part, and then we have a great overview about what you want, how we can help you with special special topics. And this is another point, guys. If you have special questions, if you have wishes, if you have any topics that are driving you crazy, they are very interesting for you, type it in the chat box right now or during the next minutes, or below that video if you watch it on YouTube. What is interesting for you? What do you want to know about the basement or the foundation of trading? Not an analysis for Euro USD. That's another point. For that, we have other webinars around the whole week. If you have any question about special topics that are really interesting for you, type it in the chat box now. My wonderful, amazing, great colleague from Admiral is watching it, and he will write it down on a special paper, and we are going to fulfill your wishes to the next week, or write it down under this video on YouTube right now. So this is another point of diversification, that we work together, all together, to help you to become successful in trading. So diversification, this is the last point of this slide, will help prevent you from falling into actionism. Oh my God, what does that mean? It's not really difficult. Will help prevent you from falling into actionism. Let me explain it a little bit carefully, sorry. if you are focused, for example, if you are focused on one chart, maybe on one market, maybe you are a Euro USD expert, or maybe you are DEX expert, or do you think you know the Dow Jones really, really good? And maybe you have rules for that, to chart, to make trades in your special market. Maybe I can talk in that way because I know that experience. I made it so often in my past. So it's a little bit funny, and because I know that point, I made it so often. So, and assuming you have rules and you focus now on your chart, and now 1 hour is gone, second hour is gone, no trading chance. Third hour is gone, no trading chance. It's noon, you have a lunch, no trade from tomorrow to lunch. Your rules don't fit this morning, and it's lunch and you didn't make a trade. No money, you earned no money. And now, okay, you think, oh, it's afternoon. No, market's going up, but your rules don't fit at that day. And you're getting more nervous and nervous and nervous because the day goes on, the time flies by, but you don't have a trade today. And then if you're focused on one chart, then you're very close to get falling into actionism. Actionism means you push the button because you need to make a trade outside of your rules. The most important thing, I make a trade. I must earn money, and this is actionism. You make anything, but you don't stick to the rules. And this is the big, big mistake if you're falling into actionism. And this is the big danger if you work without diversification. And this, especially this point, diversification will help you prevent you from falling into actionism. Please, guys, write it down with your own fingers. Look at this one, pen and wonderful paper. Write it down. Maybe you can make a screenshot, of course, but let me explain something about your brain. You can see it, you can hear it. And now I go to the next slide. But if you take a pen with your own fingers and you take a paper, guys, and you write it down what you saw and what you heard, you can see it a second time because the energy is running through your arm from what you heard and what you see. It's running, the energy is running through your hand, your fingers. You write it down. Diversification helps to prevent falling actionism. Then you see it again. You see it the second time, and then it's more rememberable for your mind. So this is the point where I always say, okay, you can look the video after that on the channel, YouTube channel of Admiral Markets, but it's better even you throw it away later. Doesn't matter, but write some topics down. Then you can see it's just a question of energy. Energy of your mind, of your body. Use that energy ball inside of you guys. We all have this wonderful energy deep inside of us. But there's so many education over, like more about above and over this energy ball we have as a child. We was full of energy, but the older we are, the less energy we have. Come on, let's get it out with this new energy. And this is one point, write it down. Okay, I hear and I forget. I see and I remember. I do and I understand. What a great quote from Confucius. Confucius, thank you, Vincenzo, very, very much for that wonderful quote. Okay, let's go to the next slide for you guys. Diversification's rolling trading strategies. Trading strategies, and this is what I mentioned with the last slide, diversification means more than one chart or asset, more than one currency pair, more than one setup, and of course, more than one time frame or trend size. So this is the real meaning of diversification. Why more than one chart or asset? Based on my own experience, guys, maybe 2 years ago, I traded shares and the stock exchanges. Yes. But then we getting to the top of the economy circle right now. We are at the top of the charts, and we are very high volatility, and I stopped trading with the shares. If I would have only shares I could trade, I couldn't trade the last 2 years. But I have diversification because I was trading shares and currencies and communities and indices, of course, and very seldom futures, but very seldom. Today, no more. So that means trade with more assets. It's okay if you are a future trader. Maybe it's okay you are a currency trader, of course. But sometimes we have really interesting chances to trade in the indices, Dow Jones, Nasdaq, DAX, the bond markets, and so on. And sometimes it's better you trade in currency. It's about the trend or something you're about based on your setup, of course. And so that means diversification means you have more than one currency pair. As I said, it makes no sense, guys, to trade with Euro USD. Since 2 days, we had no moves in Euro USD. Yes, today we have a great decrease, sharp decrease to the lower side in Euro, but that was rumors about the ECB tomorrow, the ECB rate decision tomorrow. So, but we have a wonderful move in Euro and USD, Japanese yen for, of course, the last days. So that means even you look this video couple of months later up to today, it's always the same. You can have a look back to the charts to the today, Wednesday, the 11th of September today, and you could see at that time what I said. It makes sense to have more than one currency pair. What does it mean to have more than one setup? For example, I am a trend trader. You know that if you follow me for a long time or a couple of weeks right now, you know I'm a trend trader. I love trends, and that's the foundation of every chart. Trend trading, movement correction leads to a trend arm, and the trend continuation is always more likely than a trend break. So this is really easy to realize and to recognize a trend in the chart. But sometimes, look at silver, for example, today, no trend. In daily chart, no trend. So what should I do now? I don't have a trend. And you know what I said a couple of minutes ago? We are very close to actionism, that we break the rules. Important, we make a trade. We make a trade. We need to earn money. But if you have more than one setups, maybe, for example, trend trading, movement trading, or statistical statistic systems, or you have chart technical systems like breakouts, triangle, shoulder head, shoulder formation, double low, triple high, something like that. And if you have experience in using that, then it's the best what you can do in trading. Yes, 3T, trust the trend. Oh, I see. You guys learned a lot of things from me. I'm feeling great right now. Thank you very much. So I know you learned something. Yes, the 3 T's, trust the trend. Yes, absolutely. But sometimes, yes, you always have a trend. If you don't have a trend in a small time frame, you have a V in a medium. Yes, or trust the teacher. Oh no, I wouldn't say that. Don't trust me. Yes, sometimes you can trust me about the charts, but yes, of course, trust is a really interesting topic. Yes, trust the teacher, of course, because I want to tell you the absolutely very truth about trading and mindset. That's absolutely right. So, and sometimes if you don't have a trend, trust the trend. In a small trend, you have medium trend, or in the big trend, you have a trend. A trend is always there, always there. It's a question of the time frame, a question of the trend size. But sometimes you don't have a small, you have a big account. Sometimes you have too much time and you don't have time to trade the small trend because you have to go out, you have to go to make your job and something else. So, and you want to make the medium trend. Oh, and I see, oh, I don't have a trend in a medium trend right now, but I don't have time right now. Okay, but you can see, oh, I have a double low, or I have a triple high, something else. Oh, this is a great stuff. You can make a movement trade there. So that means if diversification means you have more than one setup for your own strategies. And of course, more than one time from or trend size. And this is, guys, the last point here is one of the most interesting and most important topics, because, for example, you want to make trades in hourly chart. That's not enough. You need to know where are you in the daily chart. Or you want to make a trade in the small trend. Then you need to know where are you in the medium trend or in the big trend, because follow the smart money, follow the big trends, follow the Titanic. Never cross the Titanic in front of the Titanic. It's not good. Maybe you have power enough to make it one time. Maybe you have power enough to make it a second time, but a third time, it's really hard. It's always better, and it's a wasting and it's a saving of power if you follow the shadow of the Titanic. So always diversification means to trade, to have a look at the more than one time frame or trend size. This is the role in the trading strategies. Let's come to the next slide here. Diversification role in risk management. The best traders around the world are the best risk managers. For example, or basically, and to be honest,
signal 5 minutes.
You can trade whatever you want. You can make in trading whatever you want. Maybe you can trade by sunset and sunrise. You can trade by the mood of your girlfriend. If she is in good mood, make long trades. If she's in a bad mood, make short trades. You can do whatever you want. Or vampire trading, yes, of course, moon trading, or the moon. I know traders, they make moon phases trading. Oh my God, whatever. You can do whatever you want as long as you control your risk. That's the none and the plus and ultra, the alpha and omega in trading. And you can ask all my colleagues, Paul and Jens and all the other, Heiko and all the other guys, Jay, for example, ask them. All of that guys know that they have to be risk managers. Control your risk and you control your trades. You need to know your own penguin factor before you think about diversification. What does it mean? What's a penguin factor? Maybe I give it another name. It's the SM factor. No, it's not sadomaso. It's sliding moving factor. What does it mean, sliding moving? Do you know it when you are getting nervous in trading, when you are engaged in a trade? If you have a little bit more money in the market, you have a high leverage, you have too much lots in the trading, and you're getting nervous, you're starting to sweating on your hands, and the mouse is getting wet, and then you're sliding and moving factor on your chart. Oh my God, I'm nervous. And you stand up and you go away, left and right, and you switch sliding on your chair and you need a new chair every week. Then guys, your SM factor and your penguin factor is too high. A penguin factor means if you ever watched a penguin and the penguin is outside of the water, he's always in danger about its own enemies. But is a penguin inside of the water, there is an expert. Then it's an expert. He can play with all his benefits and all its advantages in the water. Where do you feel comfortable? Where is your penguin factor? What is the amount behind the risk? Because if you say I risk 1%, but how much? It is 1%. It is 50 euros. It is 5 euros. It is 500 euros. What is the amount where you're getting nervous? For example, you set your stop wherever you think you have to, you set it. And you see, okay, if I lose that money, it's 50 euros. Are you getting nervous? The price will go closer and closer and closer to your stop. Are you in danger then to actionism, to getting actionism, to intervene into that trade? Or if you are in danger to trail the stock closer to the current price, even you will break your rules with that action, then you have the wrong SM factor. You have the wrong penguin factor. That's the reason why I always say you have to know your penguin factor, your SM sliding moving factor. Only if you have the risk management, you're getting really, really calm. And you can say, I don't care. Okay, it's getting the stop, the price in the stop. Okay, it doesn't matter. Bite me. Whatever, just a trade, no more, no less. Then you have the right SM factor. Then. And if you know that, and this is a strong advice, cut it and make it the half of them. Why? And now we come to the point, diversification. Maybe you are in a situation you can make more than one trade. In my example, sometimes I have 4, 5, 6 trades open at the same time. I have to calculate my risk. Because sometimes it's the possibility, sometimes I have the situation that 1, 2, 3, 4 trades in a row are running in the stop. Then I have no more longer 1% risk. I have 4 or 5. And that's the point. Maybe you are fine if you say, okay, $50, it's okay, I can lose $50. No problem. I don't getting nervous with that. I don't getting wet my mouth with that. I have a strong sliding moving factor. But then the third trade is running into the stop. And the fourth is very close to the stop. Are you calm? Still calm? Or are you getting nervous then? This is the point why you have to think why you have to think to the risk management before you think about the diversification. But both of them are absolutely necessary. They are needs about your trading, about the trading. So, and if you trade with diversification, you need to calculate your risk and reduce it for every single trade. That's what I told you. You have to calculate that sometimes you have more than one trade open. And you see in currency, you see in shares, you see the communities, you see wherever wonderful setups. And you can see, oh, my setup works there. And it fits there, my rules fit there and there and there. Oh, now I have the possibility to make 4, 5 trades open to this, can open it at the same time. Then you need a really strict money management. And for that, you need to know your SM factor, your penguin factor, where you're feeling with which money you're feeling comfortable. This is really important. And this is a point, that's the role of diversification in the risk management. And be attentive about the margin, leverage, and characteristics of different assets. Because you have different characteristics in currencies, in futures, in commodities, or in shares. And that you have to know. And you see, guys, it's not, how should I say, it's not so easy to be a trader. Of course not. It's a job. That's business. That's really, really important. And of course, you see the last point, cluster risk, guys. The cluster risk means maybe sometimes in the past, I may trade in Euro Japanese yen, US dollar Japanese yen, British pound Japanese yen, and Swiss franc Japanese yen. Japanese yen, Japanese yen, Japanese yen, yeah, Japanese. It's a cluster risk. Sometimes we have in all that 4 currency pairs great setups, and I'm that trader. I can see if I see the setups, calculate my risk, push the button. The market will decide how much money I will get. But I have to calculate the risk, the cluster risk. Because if I have the wrong decision, because Japanese yen is rising up or falling down, and I have 4 currency pairs where the Japanese yen is included, I'm the loser. I am the absolute very loser. And for that, you have to risk and you have to calculate the cluster risk if you work in the same directions with the different currency pairs, or maybe you are long in DAX and Dow, or in euro and gold, or maybe in cable and euro British pound. Then you have to think about that, guys, and that you have to risk, and that you have to calculate your risk about the cluster risk. You see, there are so many informations you need about the topic diversification. The danger, guys, of diversification the danger of low or no diversification means without diversification, you are always in danger of losing the overview of the market. That means you know about risk on, risk off mode. Where is the smart money right now? If we are in the shares, in the highly risk, or in the safe haven markets. For that, you need the overview, and you are in danger. You are really in danger if you are focused on only one chart or one asset. And there is a danger if you're in, there's the danger of, the really big danger of actionism if you're focused on one chart, one setup, and one asset. And this is the big, big danger. And this is the secret of real diversification, that you are prevent to falling into the actionism. Therefore, you should make sure that you have the view at the daily chart and the hourly chart. Or if you are a day trader in 5 minutes, that you know where are you in the hourly chart and in the 5 minute. And maybe a first glance at the daily chart. Of course, the big money. Or if you have more than one setup, okay, here in our community, we are trade with trends. But sometimes we need more than one setup. And of course, more than one asset. And now, guys, real life examples of diversifications, role in trading strategies, and risk money management. And for that, we switch to our chart. For example, first of all, you see on the left side, here in the chart, on the left side, you can see a really big, let me delete that one here. You can see I have a big list. First of all, the focus is on currency pairs, but more than one. really, I'm not interested on Aussie Canadian dollar. I'm not interested on Euro USD. I have my setups, my trend setups, my moving setups, my technical chart technical systems. All of that, it's in my mind, but I have a really big list where I can see about diversification. So for example, let's make an example and let's open Euro USD. So you see, oh my God, we have falling prices in Euro USD this day. So look at this one. What's happened? I don't know. I have no clue why. Maybe it's just some rumors about the ECB tomorrow. I don't know. Maybe there's a very simple answer. You had more sellers than buyers. No more, no less. So this is the Euro USD. So switch it. Let's see about British pound USD. What's happened there? You see, not really something. Not really. Maybe in gold. Let's see. Falling prices in the last hours a little bit. So you see there is some correlation. Or maybe let's see about USD. Where is it? USD Canadian dollar. So let's see. What do we have there? Here, USD Canadian dollar, a little bit higher prices here, and let's see about WTI. Okay, falling prices here. You can see, and this is why you need this overview. Or let's see about British pound USD. We have falling British pound. And let's see Euro British pound, Come on.